the existing list is replaced by the new one. You can also create watch lists from the Market Watch tab. After creating a watch list, you can add symbols to it from different locations across the platform. From the Charts tab, select the list icon and then Add to Watch List. From the Scan tab, right-click a security and then Add to Watch List. And that's how you make a watch list. For more demos on how to Thinkorswim, head to the Education Center on tdameritrade.com.
Welcome back to Market on Close. I'm Caroline Woods filling in for Oliver Rennick. Now let's check out where the markets finished up the trading day. Well, still red arrows across the board, but well off earlier lows. Dow Jones Industrial Average down 0.4%. S&P 500 just basically about 1% lower. Nasdaq, the worst performer all day today, down 2.2%. And the Russell down 1.4%. Now let's bring in our expert panelists. Sean Cruz is a contributor here at the TD Ameritrade Network, and Nathan Peterson is Director of Derivatives Analysis at the Schwab Center for Financial Research. Nathan and Sean, so good to have you both. Sean, I'm going to start with you just in terms of your take on this market. Bears back in action today, although didn't close at the low, so maybe that's positive. At first, it looked like these stocks were coming kind of well off earlier lows based on those Fed minutes, but turns out maybe a more aggressive Fed wasn't completely priced into this market. What do you think?
Yeah, I don't think so. And I think if you look at it, what has really changed, and one thing that has been constantly in flight has been the expectation for interest rate increases. And you can almost looking at the CME FedWatch tool where they show what's priced in from a probability standpoint. I mean, a month ago, if you look at what was being priced in for where we'd be at the end of this year, it was around 1.5% to 2%. Now, the market's pricing about 2.5% to 3%. So you've seen the interest rate expectations in flight. Now I think it's also about the balance sheet. And the expectation initially, if you went back to last December, was for the balance sheet runoff to not start until later on in 2023. Then you fast forward a little bit and the expectation was Q3 of this year. Now the market is maybe pricing in after some of the comments we got from Lael Brainerd this week that it's going to start in May. So you've had a significant pull forward in a lot of actions the Fed's are going to take to tighten financial conditions. And it looks like that, alongside of the inflationary pressure, is leading to some serious concerns around the outlook for the economy. I think a lot of people thought we were going to be able to sneak through this with maybe some moderation out of growth, but you got the first call now for some sort of a recession, not only here but also in Europe. And I think you're going to start seeing this show up from a lot of other economists, where you're going to get some downward revisions to their outlooks. And I think it's even going to trickle into what analysts are saying for equities as well, where you might see analysts start bringing in some of their expectations for equities, not only for this upcoming earnings season, but also for the rest of the year.
Well, that call from Deutsche Bank also was not just for a recession, but also for a 20% bear market. So clearly not good for the stock market. But Nathan, want to bring you in. Tell us about the technicals and what levels specifically you have your eye on to know where this market goes from here.
Sure, yeah. So we just start with the S&P 500. You can see that we backed off that 4,600 level. That was a clear resistance level. We backed off that level twice back in February. And then today, we were just below the 200 SMA, closing just below there. So, you got to give a little victory to the bears there. But then I think it's a little more pronounced if you go over to the Nasdaq 100 and the Dow Jones. You can see that they clearly encountered resistance at that 200 SMA. We haven't made a new low in those indices, but you definitely want, if you're bullish, I think what you want to see over the next couple of weeks here is some sideways action. You don't want to see a new low set. You don't want to see that March 8th low being challenged. And then I'll flip to the bullish side. If you take a look at oil, this is one of, obviously, your leading inflationary gauges. It closed below the 50 simple moving average for the first time this year. Now, we're still at $97. That's elevated. But I'd say for a first step in looking for some type of a trend break, this is what you want to see if you're bullish, because we have all this talk about the Fed and how aggressive they're going to be. If we can get these commodity charts to roll over a little bit and break down a little bit, that's going to put it's going to lift some of the pressure off of the Fed, because they'll be able to point to some of these types of leading indicators. Let's keep in mind the Fed is doing demand destruction, and that typically is bearish for commodities.
Sean, in terms of sectors, we've seen tech starting to fade out again. Defensive sectors have been rallying. We talked about the Dow transports at the top of the show. They have been lagging and sometimes are seen as a leading indicator. What do you make of this in terms of leadership to the upside and the downside, and what it tells you about sentiment and maybe where we are in this cycle?
So I think when you're looking at markets and you're seeing the sort of volatility that we've been seeing lately, you don't want, I think, just a constant handing off of one sector is severely lagging and one is really pulling the market higher, or vice versa. On days like today, I'm sorry, but unfortunately the energy sector just isn't enough of the market to offset some of the weakness you're seeing, especially when you look at those big tech high flyers that you see in the Nasdaq 100, but also have a significant weight in the S&P 500. So I think what you want to see is, one, just a little bit more of a moderation in terms of the daily moves, but on days where we are moving higher, I think just the breadth of the names and the sectors that are participating in that upside move, you want to see that to maybe be a little bit more of a gradual grind higher. Those are usually a little bit more sustainable than this, one sector is up 2% one day, then it's down 2% the next day. When you're having that phenomenon play out and it's being handed off into the defensive versus some of the more cyclical or some of the more sensitive areas of the market, it's hard to get a sustained uptrend, I think, as long as you have that environment going on.
Nathan, the Fed minutes were really the big data point that we were watching for this week. So until earnings season begins with the banks next week, you talked about, wanting to see this market move in kind of a sideways pattern. What's going to move the market between now and, when we get some more data?
Well, yeah, so more data. We got CPI and PPI coming out next Tuesday and Wednesday. So those, if you look at some of the leading indicators there, they're likely going to be coming in hot. Let's see how the market, plays with that. That's why I kind of point to the commodity charts, because as we get the CPI and the PPI, they're already backward looking. They're a little bit more of a lagging indicator, PPI being a little bit more of a leading indicator. But what's going to move the market? It's all about earnings. So each day you want to come in and check those S&P earnings estimates to make sure they're going in the right direction, or hopefully just hanging in there. Sean kind of mentioned that. So it's all going to be about earnings, and it's going to be about guidance. It's a little bit tough for these corporations to come out here and provide with a lot of confidence what's going to happen. But this is where we're going to get a read on the consumer, Caroline. This is going to be so important, because the big question is, with all the inflation that's happening in the economy and the hit to disposable income, how is the consumer hanging in there? The corporations are going to let us know. They've got their generals on the ground, and they're going to be able to tell us based on their guidance what the consumer is doing. So that's what's going to drive the markets.
Yeah, we'll have to see if earnings become a headwind or a tailwind for this market. Nathan, Sean, thanks so much.
Yep,
thank you.
Coming up, the CEO of EXL Service joins the show. We'll find out why this stock hit all-time highs this week. Market on Close. Take a quick time out, but we'll be right back, so stay tuned.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Trading isn't just a hobby, it's your future. So you don't lose sight of the big picture, even when you're focused on what's happening right now. And Thinkorswim is right there with you to help you become a smarter investor. With an innovative trading platform full of customizable tools, dedicated trade desk pros, and a passionate trader community sharing strategies right on the platform. Because we take trading as seriously as you do. Thinkorswim by TD Ameritrade.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week on tdameritradenetwork.com to all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
Welcome back to Market on Close. Time to focus on the importance and real-world use of analytics in today's business world. Joining us now is Rohit Kapoor, CEO of EXL Service, ticker symbol EXLS. Should mention that shares hit an all-time high this week. Rohit, thanks so much for joining us.
Thanks, Caroline. Thanks for having me.
So just to start, lay the groundwork for us, please. Tell us more about the services you provide.
Yeah, so we think about ourselves as a data analytics and a digital operations and digital solutions company. Essentially, what we do is help our clients create value out of data. We help them make better business decisions, and we help them run their operations in an intelligent and smart and digitally enabled way.
So what is the data you're analyzing? And talk to me about some of those business decisions you may be making with your customers.
Sure. So today, every single business is a data-led business. And every single business is trying to be able to serve their customer in an agile format, deliver to them services and products in a proactive manner, and anticipate the needs. We call this the millisecond economies. So every customer expects to be served on time, in real time, and therefore knowing about your customer becomes really, really critical. The data sets that we use are typically those that our clients already have about their customers, and you can combine this with external data sets as well as a proprietary data set that EXL has to be able to get that insight. Getting to that insight is really important because you want to be able to offer the right product at the right time and at the right price to that customer, and it's got to be a meaningful interaction with that customer. So and if you don't do that, it's going to be a very clumsy experience, and therefore you're not going to be able to attract and retain and keep customers.
You have unique insight into quite a diverse range of companies in so many different sectors. So many companies are facing so many headwinds at this point, whether it be pricing pressure, supply chain issues, labor shortages. What are you hearing from clients in terms of the biggest challenge that they face right now?
So the big issue right now, of course, is inflation. And with everything going up in terms of pricing, being able to understand that correctly for your business model is critically important. Think about it, that today the value of a used car is in many cases more than that of a new car. And how to deal with that kind of a reality becomes incredibly important particularly for an auto insurer, a car dealer, or anybody in that ecosystem. So inflation is a big part of this equation. The second part is most of our clients typically end up having their data stored in silos. So you have one part of the organization that knows a little bit about their customer, another part of the organization that knows something else about the customer, but these things are not interconnected, and you can't really have a 360-degree view of the customer in real time. That's a real challenge. So what we do is we help our clients store that data and manage that data in a way in which you can build the right kind of analytical models on top and derive that insight and be ready to serve that customer with the right product and the right service at the right time.
So Rohit, speaking of prices moving higher, I mentioned that your stock hit an all-time high this week, down about 1.5% today, but still up 1.5% year to date, so outperforming the broader market. What drives it higher from here?
So for us, it's much more about a secular demand. It seems to be that this shift towards digital transformation, the use of data analytics, that's getting much, much more energized. Every single customer is looking to reduce their cost, is looking to enable their business operating processes in a digitized format so that the end customer experience can be a lot better. And they're looking to acquire new customers and grow their business in a profitable way. We help them solve this basic problem. So we've been working with our clients, and our growth rate has accelerated over the last couple of years. And this business message of ours, leveraging data, is really resonating in the marketplace. So we see strong demand for our services that we provide to our customers. There is large-scale digital transformation that we are driving for our customers, and that's allowing us to grow faster.
We have to leave it there. Rohit Kapoor, CEO of EXL Service, thank you so much for sharing your insights with us. We really appreciate it.
Thank you.
Have a good one. Up next, it's time to take a look at some overlooked stocks, including GoGo, which spiked to new yearly highs today. That's next on the TD Ameritrade Network.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the income investing course and a whole lot more.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week on TDAmeritradeNetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Time to take a look at a few names that slipped under the radar in today's session. John McNichol joins us now from Salt Lake City. Hi there, John. You have some overlooked stocks for us, starting with GoGo, which was up, wow, 7.6% today. It's joining the S&P Small Cap 600, and investors taking that as good news.
Yeah, that's right, Caroline. That was one of the big news with the stock GoGo being added to the S&P Small Cap 600. The stock was actually up as much as 16% earlier in the session before kind of backing off. From a technical standpoint, the formation that was shown on the chart is what traders refer to as a shooting star, where the prices basically shot up and made a new 52-week high at around 22.27 before backing down and trading back in the range, currently at about $20.65. Now, this is still a stock that is generally in a very positive uptrend. However, with that candle formation today, it wouldn't be out of the ordinary to see prices pull back and retest the recent breakout closer to around that $20 level. Another thing to keep in mind, this stock may also be dealing with a bit of a short squeeze, as about 39% of the float, according to recent reports, are short. So if there is some continued closing out of those short positions, we could see some upward momentum there. Now, GoGo is kind of pretty much almost a monopoly when it comes to in-flight broadband internet. And they continue to expand those services across the board to include 5G services there. So they're expanding that on their air-to-ground network, where they can go ahead and continue to improve some of the newer technology that's available, particularly in the 5G space there. So with the stock hitting that 52-week high, like I said, we may see prices pull back a little bit. However, if we do hold that $20 area, the stock had previously traded around the 12 to 19.20 area, about an $8 range there. So if we were to hold the lower end of that $20, we may see price continue to drift higher, possibly up in the high 20s, let's say the 20.27.8 area, and form a new range. That would kind of coincide with the upper part of its longer term channel, Caroline.
It's interesting, John. I mean, up 52% year to date, yet the only time I pay for internet on a flight is when I'm working, and we haven't even seen business travel come back yet, really. So what's behind that run up?
Yeah, that's interesting. With a few of the flights I've been on, I pretty much get a complimentary 1 hour there, and that's usually about enough that I need. But I have taken advantage of the services at other times. But from a growth standpoint, they're again a pretty profitable company. Their EPS growth most recent quarter was up close to about 580%. Again, that's kind of comparing to when things weren't going so hot a little over a year ago. Their trailing 12 months is up 182%. Revenue, not as much, about 6% for the most recent quarter, but their overall revenue growth also increased about 25% trailing 12 months. They're a very profitable company as well. Their gross profit margin is on the ends of about close to 70%. Their net profit margin is about 46%. So they're certainly making money where it counts there.
All right, so I guess they don't need those business travelers to return to be profitable. In terms of the next stock, overlooked stock, RPM, another big winner today, up almost 5% after earnings. So something tells me those earnings must have been pretty upbeat.
Yeah, that's right, Caroline. They were a beat there, both in revenue as well as on EPS there. Basically, their revenue growth for 2022 was up 13%. That's compared to 8% from 2021. You can see their gross margin backed off a little bit, but still relatively high at about 34.8%. And you can see, as far as looking at their income before taxes, not quite as great as we saw from 2021. But it's kind of an interesting story with this stock. It's a stock that's already been beaten down. It's down about 14% year to date. However, recently the price did break out from the previous week or actually today, above the $84 level. Now, what kind of makes that significant as you look at this chart, Carolyn, is that, again, the stock had been downtrending since early January, but started flattening out and started making higher lows. This is what some traders refer to as an inverse head and shoulders. And breaking above that 84 is the neckline, where some traders may look for some additional momentum to the upside, as this would be possibly a bullish reversal pattern. In one day, we got back above the 50-day and the 200-day moving average, which makes it more positive. And as you can see from a longer term, this stock has had a range from around 78 upwards to around the $100 level. So we've kind of traded up to that midpoint there, and we will look to see if that momentum actually continues.
Yeah, it's interesting you say up to the $100 range. I was just looking at the median price target, and that is $100. So analysts for the longer term think this is a stock that can run higher from that $86 per share that it is right now. Should also mention the majority, though, do have a hold rating. Nine holds, 5 buys, and 1 sell. All right, John McNichol, really appreciate you bringing us those overlooked stocks, especially on a down day. It was great to have some shooting stars. All right, that's it. That's all we have. Market on Close is over. I'm Caroline Woods. Your first trade is next. Have a great night, and I will see you tomorrow.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The platform demo webcast series is designed to help you broaden your knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate TDAmeritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
I'm searching for info on options trading, and look, it feels like I'm just wasting time.
That's why TD Ameritrade designed a first-of-its-kind personalized education center. Their award-winning content is tailored to fit your investing goals and interests, and it learns with you. So as you become smarter, so do its recommendations.
So it's like my streaming service.
Well, except now you're binge learning.
See how you could become a smarter investor with a personalized education from TD Ameritrade. Visit tdameritrade.com/learn.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the Watch List at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
Welcome to your first trade. I'm Scott Connor, a 30-year veteran trader, and it is Wednesday, April 6th. Now, on our show, first we'll kick things off with an example trade, option strategy trade, based on one of the big banks, Bank of America, symbol BAC. We'll have the chart master help us break down the chart before we put on that example trade. Then we'll join John McNichol and talk about a concept that's not always completely understood by options traders, and that's what's the difference between option volume and option open interest. If you're a little fuzzy on that, we're going to clarify and demystify the difference between the two, if you will. And then finally, I'll wrap things up with what happened on the markets today. We have a second day follow-through of a sell-off yesterday. Momentum continued to the downside. We'll talk about what was behind that and what stocks were on the move. All right, well, let's kick things off from the top. As I mentioned, we're looking at an example trade based on one of the big banks. Now, remember, in a couple of weeks, they'll be kicking off the earnings season. But we thought we'd look at one of the big names, Bank of America, and put on an option strategy maybe that expires before, or we'll take a look at when those expiration dates are and when they're most sensitive to that earnings release. But before we get to the trade itself, let's bring in the chart master, Ben Watson, joining us from Salt Lake City to get his take on what he sees from the charts. Ben, it's been a while since we looked at one of the banks, but this is a big name, one of the big 4 or 5, I guess, out there.
Yep.
And thought we'd look at an example trade based on the banks. Now, overall, this group's been under pressure. Financials have done okay, obviously, with higher interest rates, Ben, but what's your take from the chart of this particular symbol, Ben?
Well, I'll tell you what, I think it was, Scott, the beginning of last earnings season, since the banks tend to report at the beginning of the season, that we looked at some of these other financials, but Bank of America has generally been in a longer-term uptrend with a bit of an intermediate-term downward bent to it. And if you look at where these lows have been, overall those lows have been higher. You look at the 50-period simple moving average, the blue line on the chart, that's generally been moving higher in a series of higher lows. In the near term, though, definitely moving to the downside recently, and you kind of see this bounce up off of that 38 support, that very big red candle, just about the time that the company issued dividends. The RSI was deep down in the oversold range, and then the price of the stock bounced up off of that support at 38 into a bit of a double top, right around where that 50-period simple moving average was, around that 44.5 level as a resistance, and then it starts to sell off again. So we get that lower high, now moving in, currently at the moment sitting at a higher low. We get a sell off into a little bit of a gap down into a doji candle, kind of the same open and close today. That candle kind of representing maybe a little bit of equilibrium, if you will. The potential is there for a bounce back up to that 42, maybe even as high as that 44.5 level. But if it keeps moving to the downside, Scott, you've got a support around the 38 level that's been tested once, twice, in that whole area, right around 35 to 38, has been a level of support on a longer-term chart. But the RSI generally trending down as well, not seeing a lot of bullish momentum here going into the earnings announcement. Maybe the only bullish real note here is the fact that this hasn't made an equal or lower low yet in the context of this move to the downside. So if it turns around and bounces higher, this could be the start of perhaps moving towards some of those previous highs. If it breaks lower on the earnings announcement, could be moving down towards that support level around the $38 mark or so. And it could change perhaps this trend from what has been that longer term uptrend into maybe an intermediate to longer term downtrend. Scott?
Okay, well, as you can see, the stock has definitely been on the move, and I'm looking at this stock, and again, if we're going to stay before the earnings announcement, which I believe is the 18th of this month, we don't have a whole lot of choice. It might have to be a short-term trade, maybe just a week, a little over a week. So it will somewhat limit what we can do, but I still think maybe going into this earnings announcement, the stock kind of looks like it's trying to hold a range here, somewhere between 42 and 40. Is that a fair takeaway from the action that we've seen with the stock? Now, I know obviously it's down from its high of 50, which we saw back in the sort of the beginning of the year, in February. But does it kind of look like that's a range maybe that's establishing now, that 43 to 40 level, Ben?
Yeah, absolutely. If you look at today's candle, kind of that equilibrium candle or spinning top or doji type candle today, at that support level, right around that 39.70 was where it closed today. So right around $40, and then that resistance overhead at about 40, or about 42, certainly seems to be a range where there is some likely potential movement. Of course, that's never a guarantee, and there could be surprises prior to the earnings announcement as well.
There certainly could. All right, well, Ben, great breakdown of the charts once again. It's always helpful to sort of frame up or get some perspective as to what a stock has done in the past before considering any option strategy. It helps give an outlook, or helps a trader establish a bias, or like I said, an outlook, Ben. Always a pleasure having you here, Ben. Thanks again for helping us break down that chart. And now we'll tackle an example trade on Bank of America pre-earnings. Thanks, Ben. See you tomorrow. Okay, let's go to the trade tab on Thinkorswim, and I have the symbol Bank America in there, BAC. Now, let's take a quick look at the expiration dates. Again, we're starting with time and price. So time, how far out does a trader want to go with this example trade? The choices are, they are weekly options, so we can go out to the 14th expiration, the 23rd expiration, the 14th, the 22nd, or the 29th. Now, we know that earnings are the 18th, so the week that would involve the actual announcement of the earnings would be this one, April 22nd. So if we want to stay inside of that announcement, the choices are somewhat limited. So let's do this. We'll look at a short-term trade on Bank America. Now again, this is very short-term, only about a week in length, if you will, 8 trading days to be exact. And the stock is currently trading about $39.70, so just a little bit below that $39 or $40 level, which has kind of been an area of support as we've seen here in the recent past. Now, what if a trader was thinking that, okay, between now and next Friday, or in other words, a week from tomorrow, which is still well before the announcement, that maybe if interest rates stay up here, the banks and the market sort of consolidates here after 2 good days of sell-off, if you will, that maybe the stock will drift a little bit higher going into that earnings announcement. Now, if that were the case, what would be a potential strategy that would align with that? Well, a lot of different things might pop to the mind of an options trader, like buy an out-of-the-money call, buy a vertical call spread that's slightly out of the money. Today we're going to look at something a little bit different, combining 2 vertical spreads, and that is the butterfly. So we're going to look for the stock here at $39.70. I'm going to go to the 40.5 strike and buy the 40.5, sell the 41.5 call spread. Now we're buying that call spread. That's bullish. It wants to see the stock move up at least to 41.5. That would be ideal. But at the same time, we're going to sell a 41.5, 42.5 call spread. Now when you add those two, the long call spread, short call spread, you have the butterfly, because in both cases of both vertical spreads, the short call is the 41.5. So let's see how this works. Now, one easy way to do this is just to move your mouse over 41.5, and I'm going to right-click there, and then go to Buy, and then slide over to Butterfly. Now, see what it does here is that by doing that, it creates the 41, 41.5, 42 butterfly. Now, why did it do that? Well, it uses the increments that are already established with the strike prices, and those are $half-dollar increments. So it's using 41, 41.5. So we're going to slightly change the strike on the 41, take that down to 40.5. So there we go, that's 40.5. The short strike would be 41.5. Now the long strike, we need to make that 42.5. Right, so we're going to keep this balanced. Now, this is a very small debit. Looks like it's trading for about 12 cents. Right, so the maximum loss on a butterfly is what you paid for it, of course, plus any transaction cost. So it's 12 cents or $12. The maximum value on this is if the stock were to go out at 41.5, that spread would be close to its maximum value, about $1. Right, so that would be approximately an 88-cent profit. But again, the stock would have to go to 41.5 to achieve that. And the likelihood of it going right to that price is obviously pretty low coming on a week from Friday. But just for fun, we thought we'd take a look at this one. Now I'm going to right-click on this just really quickly and take it to the Analyze tab so we can look at the risk profile of this particular strategy. I'm going to drag this a little bit wider here. There we go. Just so we can take a look at this. Now again, remember this strategy is one that is referred to as the witch's hat. And why is it the witch's hat? Well, you can see it kind of forms that shape, if you will, of the witch's hat with a peak here and the brim on the left and the right. Now above 42.5, that's the maximum loss of $12. Below 40.5, that's the maximum loss of $12. Anything between 40.65 and 42.40, right in that range, is some degree of profit. Now the maximum profit would be if it went right to 41.5, and as I mentioned, that's about $88. And that would be on expiration Friday if it were to go exactly there. All right, well, the odds are low of it going exactly there, but again, there's still a range of where it can go to be somewhat profitable, somewhere between 40.6 and 42.4 or 42.38, somewhere in that range, to at least yield some sort of profit on a week from Friday or expiration. All right, we're going to go ahead and send that one out and let it work. And let me go hit confirm and send. As a matter of fact, I'm going to change this from day to GTC, and then we'll send that out. And then you can see here, max profit, $12, like we said, max loss, 88. Don't forget to factor in any transaction fees. All right, I'm sending that order out. It is working. We'll keep our eyes on it and watch and see if it doesn't get filled. All right, now stay with us because John McNichol is coming back, and we're going to talk about something that's a little bit of a gray area to a lot of options traders, particularly if they're somewhat new to it, and that's the difference between option volume and option open interest. We'll make sure that's clear for all of our viewers after this short break.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Welcome back to Your First Trade. I'm Scott Connor. Now let's turn our focus back to options trading. And when choosing an option strategy, now traders often begin by considering time, price, and volatility, something we talk about a lot here on Your First Trade. Then traders turn to the Thinkorswim Trade tab and then set up the trade, looking at the strikes and etc. Now, one often overlooked consideration is option volume and option open interest. Now today, you'll learn the difference between the two and how traders can leverage the Thinkorswim platform to get real-time data, help them in that decision-making process when it comes to choosing a strategy. Now joining me to break down the difference between the two, option volume and option open interest, is Your First Trade contributor, John McNichol. John, thanks for joining us here again on Your First Trade. And this is a topic, John, that I have to even admit, when I first started learning about options, that wasn't my focus. It was more on what are the strategies, what's bullish, what's bearish, how about the Greeks, and then finally, I think it took a while for me to really understand the difference between open interest and volume. So maybe the first thing we can talk about is, let's start maybe with volume, talk a little bit about what that means, and then of course how viewers can sort of keep an eye or monitor volume on the Thinkorswim platform.
Right, sure, Scott. Well, as you know, particularly with the example trade that you did, liquidity is very important when one's trading options and the ability to buy and sell those options. And so what we can do on the Thinkorswim platform, on the trade tab, there's what's referred to as a volume layout. And here is where option traders can easily view trading volume levels for all calls and puts. The numbers reflect the total number of contracts that are traded that day. And so by comparing different expiration dates, traders can see variations in volume. In addition, they may notice that these variations can form patterns. These may include short-term versus long-term options, as well as weekly versus standard expiration dates, Scott.
Okay, well, let's start off by jumping into the Thinkorswim platform. I'll go right to the trade tab. I have Apple in as my symbol, and I'm going to change one of my columns headers to volume so we can see that real quick. So I'm going to go to where it says Theo Price, drop down to, let's see, actually I think that's going to be up here. Yep, it's on basic price and quotes now, and then drop over and lower down to volume. There we go. All right, so now I'm looking at volume for each option, and you can see each strike here to the right. So I'll highlight the 175 call. Now these expire in 30 days, John, and it looks like they traded about 1,600 contracts in terms of volume. Now you mentioned that we'll have different volume at different expiration dates. This is a weekly with a month to go. I'm going to open up the options that expire next Friday. Let's take a look at that same option, 175. Look at that, 57,000 options traded at that same strike with 8 days to go with those options. So you can see, yes, volume does vary, John. You're absolutely right about, expiration to expiration. You can see the big difference there. Now, let's talk a little bit more about the importance of volume, option volume, John.
Yeah, as I said, Scott, the focus here is on liquidity. So when volume levels are relatively low, option traders may encounter wider bid-ask spreads, which can result in less efficient order entry. It's also important to remember that this can apply to both entering the trade as well as exiting a position.
Got it. So, all right. So that makes perfect sense. When you have higher volume levels, like we saw the big difference between the different expiration dates on Apple, the more activity there is, you tend to have tighter markets, more liquidity, and oftentimes it's easier to get in and out of positions. And you're absolutely right. You have to consider that going into a position and also potentially coming out of that position if it's closed before expiration, obviously. Okay, so volume, pretty straightforward, John. The total volume, and it keeps accumulating throughout the day, but that's the daily volume for each call and put at each strike, and we can see that and the importance of what it means in terms of potential liquidity. Now, let's move to the one that's a little less clear for many traders, John, and that's open interest. Bring us up to speed on this one.
Yeah, so this is a different animal. Unlike stocks, options don't last forever. They're created as well as they're closed out. And so this is where open interest comes in. Open interest differs from volume in that it's a cumulative number. Over time, it calculates the total number of open option positions. So it's important to understand how open interest is calculated. Remember, an opening trade initiates a new position, and a closing trade eliminates an existing position, Scott. Now, open interest simply is going to tally the balance between the opening and the closing trades that are there to determine an ongoing number.
All right, so a distinct difference between open interest and volume. Volume tells you what the volume for the day. Open interest each day keeps adding or subtracting to that cumulative total. And all right, so open trades are someone opening up a new position. Closing trades are when you're actually closing or eliminating a position. John, let me jump back to the same place we were before, and I'm going to add open interest so we can see those numbers next to the volume. So join me back on the Thinkorswim platform. I'll go to the options that expire in 30 days. I'll change the column header that I have here, drop down to basic price and quotes, and then drop down to, now I'm going to go to open interest so we can see that number. Now, let's drop down and take a quick look at that 175 call with 30 days to go. And you can see the volume was 1,600, like we said, about 1,600. But look at the open interest, John, significantly more, over 11,000. So there's 11,000 open positions in that 175 call with 30 days to go. And again, that's a cumulative number. So each open trade adds to this, and the closing trades take away. Now, let's take a look at the same thing on the option that expires in 8 days. Now, the volume on the day was 57,000, but the open interest is less than the volume today. It's 53,000. Now, again, that's a lot more than the 30-day, but you can see the accumulation of open positions in the 175 call, still pretty large, 53,000. That's the largest. Well, actually, the 160 calls have a pretty large open interest as well. But you can see that the different strikes, which ones have a lot of that open interest. Now, John, let's do this, because I think they kind of got an idea of what open interest is, but I think the the easiest way for me to understand it is when someone actually gave me an example of how it works. John, could you walk us through an example of how open interest totals change?
Yeah, sure, Scott. So a good way to better understand open interest numbers is, so let's say we're trading one option with each other, you and I, and both of us, these are opening trades. So since both of us are initiating positions, that will add a 1 to the open interest. Now, if both of us were closing the trades, this would subtract 1 from the open interest. Now, finally, let's say one of us was opening the trade and the other one happened to be closing the trade. This would be no change in the open interest total, Scott.
Okay, well that makes sense. So when the volume is all the activity for the day, and what changes the open interest is that if you and I trade with each other, and again, just for example, and we're both opening positions for the first time, we trade one option, John. We're just going to trade one option. I buy one from you, you sell one to me. We're both opening. Well, that adds 1 to the open interest. So it's an easy way to kind of keep that in mind. And the only way that 1 on the open interest is going to come off is when you and I, let's say you and I did a trade where we're both closing. I buy an option from you, but I'm buying it to close, and you're selling one to me, but you're closing your position as well. Then 1 comes off of the open interest. Now, everything else doesn't really change it. I'm opening, you're closing, no change. If you're closing, I'm opening, no change to the open interest. But I think this helps clarify quite a bit the difference between volume and open interest. Volume, again, important because that has a lot to do with liquidity, and open interest. Well, then you can see where there's a potential activity in the different options going into expiration, John. Is that an easy way to kind of think of this? We have to wrap up here, but do you follow both these numbers quite a bit, John?
Yeah, that's right. And we also have another tool called option statistics on the Thinkorswim platform, Scott, where we can actually see, what is relatively higher, relatively lower. So on those today's option statistics, we get some valuable option data that can be viewed. We can also look at the trade analysis for some of that unusual option activity. It's what traders on the platforms refer to as the sizzle index. If that number is higher, there's more volume. If there's less of a number, then there'd be less volume. And we can see that in a real-time perspective.
All right, John, we have to wrap it up, but let me just flash to the trade tab. I'll show you where the today's option statistics is, and our viewers can go there and actually take advantage of. There's a lot of information about option statistics and options volume right here at the disposal of the traders on the Thinkorswim platform. So great tool. Check this one out as well. John, thanks for helping us better understand the difference between volume and open interest and what that means to an options trader. Take care, John. We'll see you soon. All right, stay with us because we're going to wrap up the action in the market today. Second down day in a row. What was behind it? What was impacting markets? We'll break that down after this break.
Watchlist can help you keep track of securities you're interested in. To add a watchlist to the left sidebar, select the plus sign, then Watchlist. When the default list appears, select the name box, then Create Watchlist. Enter a watchlist name. To begin adding securities, enter a ticker symbol in the symbol box, then select Enter. Continue adding all the symbols you want in your watchlist, then select Save. The existing list is replaced by the new one. You can also create watch lists from the Market Watch tab. After creating a watch list, you can add symbols to it from different locations across the platform. From the Charts tab, select the list icon and then Add to Watch List. From the Scan tab, right-click a security and then Add to Watch List. And that's how you make a watch list. For more demos on how to Thinkorswim, head to the Education Center on tdameritrade.com.
Welcome back to Your First Trade. I'm Scott Connor, and now it's time for the market wrap on this Wednesday, April 6th. Well, U.S. markets opened lower. They actually gapped a little bit lower this morning and extended their losses from Tuesday. Monday was a good day for the markets, but we reversed on Tuesday and then followed through a little bit lower today. What happened? Well, Total of the 11 sectors, 5 of the 11 sectors were up, 6 were down. As far as the S&P 500 stocks, we had about 215 stocks were up and about 285 were down. You can see all 4 indices down between half a point and a little bit over 2% for the Nasdaq. Now, what about some of the commodities we've been watching closely as they influence prices and inflation? Well, one of those, of course, is oil, but it was down today about 4.7%, down to the 97 level. That is a significant drop, one of the lowest we've seen here in a while. RB, which is gasoline futures, they were down as well, down to about 3.07. That's the lowest we've seen here in a few weeks. On the other hand, gold was up just slightly on the day, about $1.20, closed around the 1928 level. Now, what about the 10-year yield? This is what we've been watching very closely and what we were anticipating the Fed Open Market Committee notes today, the meeting notes, and after that, those numbers came out. Well, we saw the TNX, or the 10-year yield, spike up to a high of 2.64, but it closed down about 2.61. What about Bitcoin? That's been on a little bit on a downtrend here recently. Remember, recently traded up to 48,000. Today it got as low as 43,100, but closed right around just under the 44,000 level, but it was down as well in the day. And then finally, VIX, which is the volatility or fear index, that jumped as high as 24.7 earlier this morning, after about an hour after the opening. That gap down, but closed at 22.10. So not too bad at the end of the day. All right, now let's look at some sectors. What happened today? Well, we talked about the down move yesterday, and that was led by the FANGM stocks, if you will, IT, communication services, consumer discretionary, and they were also the laggards today as well. Some of the names in those groups that were down today, we saw Microsoft down 3.5%, NVIDIA almost down 6%. Take a look at Tesla as well, and the consumer discretionary almost down, let's see, about 4% on the day. So we definitely saw weakness there for the second day. Where did we see some strength? Well, the defensive sectors again. Utilities, healthcare, consumer staples all showed a little bit of strength. Some of the names there: Johnson & Johnson up over 2.5%. Pfizer up over 3%. Duke Energy showing some good strength, up 2.3%. So good strength in some of those defensive sectors. Now, what about individual names? Well, there was news today with Jetblue and Spirit Airlines. Jetblue is proposing an acquisition of Spirit Airlines, an all-cash transaction. Now, when that news came out yesterday, just after the close, we saw quite a rally on Spirit Airlines, up about 30%, and it's pretty much held that gain, whereas JetBlue was down about 8 or 9%, and it's kind of staying down there as well. Twitter also, we had an update there. Elon Musk has updated his SEC 13D filing to become an active investor. Stock is still up about 28% since he announced that. All right, what about data points today? Well, we had mortgage applications come out. They were down a little bit, no big surprise there. Purchases were down about 3%, and refinances down about 10%. And the 30-year mortgage has moved almost up to 5%. It's at 4.9. We also had the FOMC meeting minutes, which I mentioned earlier. Now, the market initially rallied on that, but sold off and couldn't hold anything into the close. What we did see is that looks like the Fed is becoming more hawkish. That's the wrap for today. Thanks again for joining us. We'll see you tomorrow at 4:30 p.m. Eastern.